think we're streaming. Looks like we're streaming. Alright. I think we are. Yep, we are streaming. Okay. Oh, hello everybody out there in TV land. It's Random Crypto Guy with the worst crypto channel on YouTube. Yay! Hopefully I'm getting better. But alright, let's get right into it. I want to try to keep these shorter. Let's start with the dollar, the Dixie, like we always do. We always want to do. And it's continuing its sideways bouncing back and forth, just as predicted. We're going to bounce in between monthly support right here and then monthly resistance. This should drop down to the weekly resistance come tomorrow. It's the 28th, so these will and so we're going to bounce around in between these two for a little while anyway. A little leveling off is due. I've been looking at the bond market, and I'll get into that a little bit deeper a little bit later. But I still don't understand it all. That's one market that I've shied away from because it's boring. But I've seen its significance and an importance as opposed to maybe just looking at Dixie alone. So that was made apparent this week with what happened across all the markets. But we'll move on into Bitcoin, and let's zoom in here a little bit. What my mentor used to tell me is everybody's always looking at something, and I found that there are three types of chart analysts. There's the horizontals, which is my bread and butter. There is the indicator people, and there is moving average people. And so when all three of those things confluence onto an area, that's a decent assumption that there will be some type of reversal that's happening. So hopefully that is the case here with Bitcoin. So taking a look at that, we see this is our turncoat support. It's getting front run slightly. It's going on with this drop base rally here. I'm surprised how strong this one is. I thought that this area, it's actually this area right here. If I want to be more technically correct, it's between these two areas. That's the more technically correct one. You got this base rally that's pretty strong on the 4H. So, and you can see that it got front run here, then captured here, and then bouncing here. A lot of strength coming in here with the selling still. Our the trend lines. Oops, that's horizontal. I want a trend line. The trend lines is pretty much the same. There's steady sell pressure. So but we are experiencing an increase in buying pressure here at the horizontal. So as you can see, we're starting to get some confluence here at the horizontal, and I take horizontals over all the other things, but like the indicator people, they're looking at something like this MACD here, this MACD elders, or something similar, some 2-line cross or 0-line cross, or they're all basically working on similar mathematics. But you can see that we are starting to see a reversal here. This colored MACD is really good at picking up possible reversal areas where you have it's green, where that means that the histogram is receding to go back up, and then the blue is kind of neutral, and then the red is downward pressure. So we're kind of still in that neutral area. So we haven't received any any type of continuation on this move. That it's actually kind of giving way a little bit. And this is the 4-hour. We look at it the daily. You see, we still do have a lot of downward pressure on the daily, but on the 4-hour, we're getting something, But like I said, the downward pressure is here, and then on the MACD, it's down below the 0 line. So you definitely have some downward pressure there as well. And I wanted to show you moving average. This is the third type of people. My first mentor, he had all kinds of indicators and stuff. I don't even know how he traded, quite honestly. he had all these weird ass stuff, just stuff everywhere, and then he would just throw up a bunch of trades and let the market take profit, and use a stop loss or anything like that, and he'd just walk away. And then when he got in trouble, he would fade out. He would start hedging against whatever trade was in the red, and fade that trade out. He would just keep building on the opposite side to maintain his margin. Like if he had a buy that was in the weeds, he would just sell until he made up the profit, that the loss that he was going to take on that buy that was in the weeds, and then he would close everything out, and that's called fading. I guess that's how he did it. I didn't get too deep into that. I didn't really like his style of trading, but I learned a lot from him. Where was I? Oh, I got sidetracked here. We want trend. Why can I know? Here it is. Moving average. No, I was looking at this on the daily. You can see the last time we crossed underneath the 21 moving average, we had the same situation. Everything was lining up. We were bouncing off this untested support at the time. This is off of this candle here, and we were underneath the moving average, and we were also sloping down. So this could continue on for a few more days, but this start leveling out. As you can see, it dug pretty deep into this untested support. So there's a that we're just beginning to tap into this turncoat support, and if it breaks below that, then we're heading back to this level, which would start to imply a head and shoulders on the opposite on this untested support here. So that could spell some trouble at that point, and that's what when I was talking about, we go back down to 20,000, down at this support down here back to 20,000. So this turncoat support needs to hold. We'll probably tap into it some more. That's what it looks like. I'm seeing this, we're seeing a similar situation here. We just haven't had that initial oomph to give us a little bit more optimism. No green Heikeneishi candles here as opposed to here. Let's see if I can zoom in a little bit further. I know some of you are looking at this on the phone, and you might not be able to see it, but we're dipping. We just dip below that. So, and this is the daily chart. So you got to remember, we might have a week or so of more of the same. Just as market decides what it's going to do, and so it's just something to keep in mind. It's very similar to that. Bitcoin often rhymes on these higher time frames, and so looks like right now the line is still holding, but um, we got a ways to go before. And it's just something to keep in mind to keep this area, this turncoat area, because if this breaks, like I said, we're going to bounce here, and then more than likely we will head down to 20,000. We might bounce all the way back up to 40 before we head back down into a head and shoulders pattern. So just something to keep in mind. And let's move on. Ethereum looking even weaker. Right now it's following again. It's not leading anymore. And but it is getting caught up in this congestion here. So I know you'll see most of the other altcoins are very similar in this pattern as well. NASDAQ also seeing taking a dump, so we haven't decoupled, that's for sure. We haven't decoupled, and that's due to the bond market, which has affected all the other markets. People, I guess, once again, what I've understood about the bond market is I don't try to explain things unless I can explain it to a 5-year-old. And what has happened is that rich people, they want to preserve their money. They're not interested in the next 200x shitcoin. They just want to preserve their money, and they'll actually even take a small loss, in nominal terms, due to inflation, to protect their wealth. And they do that by purchasing bonds, U.S. Treasury bonds, T-bills, whatever you want to call them, because they know that the United States is completely brainwashed, and they know that people will continue to pay their taxes for the oil companies and the banks. So I think a lot of the money is being taken out of the riskier assets, even things like NASDAQ and even gold to some extent, to be put in those treasury bills, because they went the interest rate went up on the bonds, so that it will help out with preserving their wealth. They're not interested in like I said, the next 200x shitcoin or anything like that. So I think that's what's happening, is that it's a $100 trillion market. So that's something to keep in mind. With Bitcoin just barely 1 trillion. So gold taking a poop. Sorry, Pete. You're lucky silver though. Silver has, actually has a use case. Mostly gold is, jewelry, and people are unloading it. They're realizing that the demand is dwindling. People are less interested in, the flash and the bling, and more interested in preserving wealth, as more and more people get educated on why there's such a wide gap on the rich versus the poor and whatnot. So looks like we're definitely seeing some strength here in the silver market. See, we got a nice trend. We got a nice buying pressure here, and selling pressure is waning. We did finish out the week, but that's not a confirmed low yet. And looking for the next high, so we have to use this trend line here from here to here. So not a lot of, we got a nice not a lot of significance there. Looking for not a lot of significant selling, just still within the channel. I don't like calling them channels, because I just look at, because it makes you think that this is something when this is nothing. This means nothing from here out. That means absolutely nothing. That's why I like to use segments to denote that This trend from here on out means nothing, and from here on out means nothing. Do not pay any attention to that. That means absolutely nothing. The only thing I'm looking at is from here to here. This is what has happened in the previous weeks, and still seeing a lot of upward pressure. We got this thin red line here, and some resistance to bust through. This is where the top of that resistance. So if that starts to break, look out above. So far so good. Looks like the demand is continuing to increase, and with the Green New Deal, I think that this will continue to go up. And oil is continuing to go up with I don't want to get too political, but they're putting pressure on Saudi Arabia to for the murder of that journalist, and the Biden administration's also kind of down on, not really down, because they know that the Saudi Arabia has them kind of by the balls with the petrodollar, but because they ship out all their oil in dollars. But the Biden's asking them, basically, please stop starving the Yemeni people, and please don't kill any more of our American nationalist journalists. So, but they're not strong arming them or whatever. But they are making that public that they are going after them. So I think that's part of it, and also I think demand is up because we're still in the winter months, and the demand is increasing because I'm seeing more traffic on the roads. So that's more gasoline than oil related, but that means more diesel, which is the real driver of the market. Is the diesel fuel. So as the economy improves, and this might continue to go up until they start upping production. There's I know a lot of people are gung-ho about, well, I'm not going to get into that, never mind. ETH Bitcoin, just as predicted. I said that this was going to make a turnaround I think 2 weeks ago, maybe 3. I started seeing, I think it was around this candle here, if I remember right. We were popping into this, and then I didn't see any signs of it stopping, and sure enough, continues to drop against the Bitcoin. And so it has hit some support here. So we might see a little bounce here, but I don't see anything stopping it right now. But I think we might see a little bit of sideways action this upcoming next few days anyway, until we can figure out what's going on with the bond market. Let's go on to, this is Monero. We had a big sell-off. Everything's looking very similar to Ethereum, but Monero actually has they had a big huge buyback. Somebody bought a bunch down here around 150, 160, and starting to make a comeback. Litecoin looking just like Ethereum. XRP pumping and dumping as usual. Go down to the blue line, might be an area to buy again. We get down in those 20s and start accumulating again, but that's, and then pump and dump. Tesla taking a dump right along with Bitcoin. I think a lot of people are a little bit scared about Elon Musk, but he only took 10% of his cash reserves. He didn't go all in like Michael Saylor. And if you take in 10%, I saw a chart somewhere as if you did 90% cash, 10% Bitcoin, that you'll hedge against the dollar, and and beat the I can't remember. It was a nice rate of return. I can't remember exactly what it was, but it was definitely beating everything out there. Even at a 1090, I'm not, my mix is a little bit different than that, but I'm also collecting interest, so I'm hoping to beat Tesla in their cash reserves. Moving on. Oh no, I don't want to go to that yet. Let's go. Where am I? Where am I? Where am I? Oh, I know. Silly me. Here we go. All right. Now this is what I was looking at. I was looking at the bond markets, and I'm still trying to understand the bond markets. I don't quite understand it enough to explain it to a 5-year-old, but what I do know is that the Fed they set the rates. I believe it's called the LIBOR rate, interbank rate. They just make up the number, and that sets it at the overnight rate. And from there, it cascades out into the bond market and affects the bond market in different ways. I don't exactly understand how all that works yet, though, so stay tuned for that as I continue to study that and learn about that. So, but what I did find on the 30-year was something interesting. Where is it? 30-year. I don't remember what it was. I should have kept it up there. I got busy with other stuff, and I didn't save it. This wasn't it. It was the 10-year, I think I was looking at. Here's this. No, that wasn't it. All right, I'll move on to it later. I'll come back to it next week. There's still a lot of things I need to learn, but basically I noticed the bond rate, the bond. I don't know if it's the rate or the yield. I can't. Like I said, I'm still learning about it, but it was down at the low end, down in here, and it was an obvious. It was a no-brainer buy. What it amount to is it was ranging. It's been ranging for the past 5 years, and anytime it reaches a certain threshold, it gets bought up, and just something that I noticed. And I know the bond market's a little more complex than that, so but I'll get back to that next week maybe. Let's go to Bitcoin dominance. Let's see, I blew things up a little bit and darkened it up so you could see it a little bit better. The dominance. All I care about is the trend. And I'm still learning. Where's zoom on this thing? There we go. Zoom in a little bit. And we are seeing signs of a turnaround here. Signs of a reversal. So you can see everything's slowing down. The buying pressure coming up, the selling pressure is giving way. So that's all I care about is looking for signs of reversal here. And so it's showing signs of reversal. It doesn't mean it's going to. It's just showing signs. Bitcoin, this is what, the weekly. Still green Heikenaishi. Surprisingly, I thought it would be red, but it's still a green. Interesting. That's on the weekly. Ethereum is not, however. Ethereum is definitely in the red, Heikenaishi. So this is on the weekly here again. Let's go. I'm going to go down because these don't make sense on the weekly. They look a little bit more because the history's not there. But we are starting to see signs of a reversal here for DOT, and the Bollinger Bands have collapsed, and I put this moving average envelope around this to give it more of a range, and I like this to be below and this line flat to confirm, or flattening to confirm that we are starting to reaccumulate, and that's what it looks like here. This is starting to look like reaccumulation on DOT. So that's the telltale signs of using this indicator, the Bollinger Band width. We have collapsing Bollinger Band, and the average is flattening, which means it's collapsing and leveling off. The price is leveling off. So that's definitely starting to look like accumulation there, reaccumulation. This is distribution here, people taking profits, and then looks like reaccumulation. Link, however, it looks like it might take another dive. It is. The Bollinger Bands are re-expanding. We are reaching above the threshold, and price is also indicative of it. It looks like maybe some more distribution needs to happen. USDT, we are seeing some flattening. This is XTC Tezos. They don't have the marketing that the others have, and the only place I've heard any word of people widespread using it widespread is France possibly looking at it. So my original favorite of all they were the first to really come out of the gate with staking, and already have a decent working protocol. And it's just weird that they don't, haven't been adopted as much. I don't know whether they got shitty salesmen or bad marketers or what. Yeah. So there's Yiffy. Looks like more distribution headed its way. Bitcoin. Once again, DOT's looking good. DOT is definitely looking good. We got even against Bitcoin. We're looking at reaccumulation. Uni, I'm still in this one. I cashed out here, I think here, but I kept the other half when I basically pulled my money out, and so now I got half as much Uni, and this is also beginning to look like reaccumulation. It's flattening out. Anchor. This one is just, the chart's so dang ugly. They got all these wicks here. It looks like constant distribution. I don't know what their deal is, but that's what the Bollinger Bands help out with, because they work on closings. So still collapsing, but price action is showing reaccumulation again. It's just, this one's so hard to read because it's so wicky. I don't know why it's so wicky compared to the others. It's just weird. VeChain, starting to we're getting expansion again on the Bollingers. I don't know. I think VeChain might have some more downside to it. I mean, it's holding its own for right now, but it's not very strong. I don't know. I might hold off on that one. MicroStrategy starting to level off. We're back here. This is the area we want to be looking at. Looks like it's getting front run right now, but this is the line where you want to be looking at. And not seeing any flattening yet. Just wacky congestion, lots of distribution going on. GameStop. Here's the big. Here's all the big hubbub as it's doubling and then crashing back down. Typical pump and dump. I guess they call it the dead cat bounce, where it's just in its death throes, the heartbeat, where it goes and retraces down to zero. Hopefully, any bag holders that got out here. Dogecoin. Trying to hold it here, hold the line here. It's back in accumulation. It's nice. It's just nice and flat down here. It's in reaccumulation, but the price action needs to hold here, and that's they're all going to follow. It's going to follow Bitcoin, so just keep that in mind. Lumen's also looking good. We got reaccumulation. We're down below the line. Nice quiet reaccumulation. XRP, we already looked at that. Pump and dump. ADA. See this big wick here. I don't know. Yeah, it's probably. Oh, that's cracking. That's why. I guess that was another part of the where a lot of people got liquidated with Ethereum. They probably got liquidated with ADA as well. ADA's looking strong. Cardano is definitely looking definitely pumping. A lot of people are getting sick of the fees associated with Ethereum, and they're looking for alternatives. And I predicted that would happen a while back, several months ago. That I didn't think it would be Cardano. I thought it would be Tezos or DOT, and then Cardano just came out of nowhere with some kick-ass marketing, and really surged ahead with a lot of their upcoming add-ons. And Ethereum's fighting back with their threatening with layer 2 solutions, as they know they're starting to get their heels clipped. So just something to keep in mind. That's it. Leave in the comments if there's anything else that you want me to follow or look at. Be glad to help you out with that, and give you my opinions and thoughts on it. This is not financial advice, so just give you my opinion and tell you what I'm doing. So these are just stuff that I'm looking at. I'm waiting for quiet reaccumulation for things to calm back down before I go into altcoins. Right now I'm just stacking sats, but this is just something that I keep an eye on, and I'm waiting for basically the alt season to be over, and then try again another time, another day. But you can see, when you go back, you can see what I think is happening, who I think the winners and losers are. And so moving on, let's go to Mr. Yen scalping. Now, I wish I had more time to do this. This is very time sensitive. When you're doing scalping, it's very time sensitive. So what I do is I have the FX Blue custom time frame generator. Just type that into the Google search engine. That's the best way to find that. And so I put it up on the 1 minute chart. Doesn't matter. It's where I keep it running. And then I have this JMA slope here. This is I have a version that I created that has some alerts on it, but it's a piece of crap. Just warn you right now. I'm not a great coder, but I know how to tinker with it a little bit. But what I look for is this is on the 15-minute time frame, I believe, if I'm not mistaken. No, I put that on the 30-minute time frame. And what I'd look for is for this to be overextended and start to the slope start to decrease. That tells me that we're looking at signs of a reversal. So Mr. Yen's super scalper he's a mean reversion trader, and he's got several different ways that he does that, several different templates, and I just kind of made up my own template because he doesn't use MetaTrader, and he hates Oanda, so, and I don't blame him, but I use what I got for the time being. And I'm still in demo in this anyway. I wouldn't trade this with less than a $3,000 account, and then even then you're going to be using 0.01 mini lots. So you're managing your risk, but there's a couple of things that you have to keep in mind when you doing this on the Euro USD. One thing is on Forex we have the calendar, and I have it running here. I don't trade if there's any news upcoming within an hour. I don't trade, even if it's green news. I don't trade. I'm looking for the quieter, less tumultuous waters. Not choppy and sloshing around, looking for big waves, catching big waves and things like that. This is scalping, and you can get yourself in trouble if you get caught up into a trend. So you have to be mindful of when the news is. And as I said, another thing that I look for is overextended. I'm looking at this is a slope of a JMA. It's a type of moving average. I don't have it up here, but as the slope extends down, we got this extended red or extended green, I know that eventually this is going to turn green again. So this would have been a decent area to start looking for buy trades. And so when I would scalp, I would be more heavily weighted towards buys, believe it or not, because like I said, this is a reversal strategy, and so we're going to buck the trend. So we want to look for that extension of where this has gone totally away from the mean. If you can imagine a moving average, let me throw a quick moving average up here. We'll just throw the 22. You can see how it's moved away, and it's showing here on the slope the same thing. And then so we start looking for those times where it's coming back, and then you can see how it crosses the moving average. So you would enter a buy here away. That would be a good place for a buy, but that's not the chart that I use to gauge that. I use this chart. So I look at where I am on the bigger scale on the 5-minute. Here's the same thing. It's just a true trend. It's the same thing. It's just on the 5-minute chart. And I'm also looking at if we're hitting areas of supply and demand using the profile and this. So there's a little bit more involved than just trying to bounce off. Oh, we'll just sell here and buy here. I mean, you might get lucky, but you don't want to get caught in something like this. This is what you want to try to avoid. This is probably some algo or some bot. So if you got caught in this, you'd be in trouble. This is what you want. You want this nice choppy action, not trendy, not very trendy. And you're going to find these at the ends of 4-hour these 4-hour support areas. You'll find these often. It's not the only place you'll find them, but that's a good area of opportunity when you're up into these zones. You're going to find good areas, opportunity to scalp. And then this is just another, here's the 4-hour chart. Again, we're looking for extension. So we've extended down here. So if I'm scalping and I find an area down in the lower time frames, I'm going to put more weight on buys. And so I'm going to be a little bit more aggressive when I buy as opposed to when I sell, because I know that on the higher time frame I'm overextended. So it would just be the opposite if we had just recently gone through an uptrend like here. See an uptrend? We moved up here, and we're way above the 200. This is the 200 moving average. And so now I would start looking. We got real aggressive, and then we start tumbling down slowly. So I would be more aggressive on sells for scalping. I would be much more aggressive on sells. Now I know, because I know where I'm at on the bigger time scale than the 200 moving average. So you don't need to go above a 4-hour when you're doing this. Probably an hour would probably be fine, but 4-hour just to be safe. And then I just use this chart to tell me. I was using the VWAP, but I've found that the moving average envelopes are just fine, and I've adjusted them a little bit to make them a little safer to work with. So you can see how it's bouncing off of, you could start here with very light, very small amounts, and then as you expand out onto here, you can get more aggressive. So let's say I put in a buy order right here, and it went against me. I could get more aggressive once I hit this line, and then maybe take profit once I get to here instead of waiting until I get to. Eventually I want to be able to take profit where I'm positive in profit by the time I get to the yellow line, to the middle. That's where we want to be at. And then I might even get more aggressive. And like if I got lucky, I put my get lucky line up here on the opposite side, and that's where I put all the take profits of all the buying. I'll put all the take profits here using these stop and take and close everything. The stop and take, what that does is I put that onto the chart. It's a script, and all the take profits will appear wherever I point my cursor. So if I stop and take, drag it over to right here, then all the take profits from here, any buys that I've put in here, and I just call it my get lucky line. It's that I'm going to make it to the opposite side of the envelope. That's where I usually set up my get lucky line. But most of the time I take profit right here. But if I see that it's really starting to move, I might just see if I can get lucky. But most of the time I end up using close everything, and I bring that in on the chart. And I keep it on no. Let's see if it'll do it while markets close. Yeah. I keep my cursor on no when I start getting near profit. I keep it on no because I might need to take it off and put in another buy order if it decides to take another leg down, or a sell order, depending on what I'm doing. So, and then once I start getting in profit, that's when I go over to yes. That way I've done that before where I didn't have my cursor on no. I had it on yes, and then I wanted to close it out, and I hit yes, and I ended up losing. I lost like 2%. I mean, it wasn't a huge amount, but it was enough. That was a mistake that that took a while to recover from. So that's why I always, unless I'm in profit, do not put your cursor on yes. That's when you put your cursor on yes. Is once you reach profit, and then you wait. You'll start seeing, when you watch it enough. There's a few things that I look for. One of the things I look for is the tick chart. It's a 20 tick chart, I believe. You'll see sometimes, right, like right here. Here's an example here. Like this is a sell right here. I would have gone in, even though it didn't take right away. I would have taken this sell because we had reached a previous resistance level. Now this has been tapped into pretty hard, so it gave way. So I would have put another sell in. I would on this leg here, maybe this leg here, and then I would have taken profit right in here. So this trade would have been maybe not even a pip profit or even a small loss. These two would have been a gain of 2 pips, and then I would have taken profit here, depending on how aggressive. Maybe I got my get lucky lines down here, and I made it. It was quick enough to where I was patient enough. But usually I end up taking profit more than I use my get lucky line. And that's some of the things I would have looked at were how aggressive, how far extended were we into sell territory, and where were we on here. So that was a sell, and we're pretty extended, so I probably wouldn't have been that aggressive here. Mr. Yen, I believe, uses on the 30, is it the 30 or the 5? I can't remember. I think it was the 30-minute chart. He has a 6 candle rule, and he looks for 6 candles on the green. Now I use my Heikin-Aishi open, high, low, close, so even some of my red candles will be green. It gives me a better view anyway of what's going on. But that's, we're looking for overextended markets, and then we go against the grain. That's how, that's how mean reversion trading works. But it's, you're not just throwing up a tick chart and just going at it, because you got your news to worry about, and you got your extensions to worry about. Like here, like I said, we're pretty overextended in the sell, but we just broke through that. So this might have some more downside to go before we get into it. And right here, here's your 4-hour demand. Now this will probably get front run a little bit. Looks like it already has. And then, of course, here, same thing. We're extended. So the buying opportunities are there, but we're not. Look how far away we are from the 200 moving average as opposed to now. So that those opportunities are waning away. So that is mean reversion in a nutshell. You can see that it's not just throwing this chart up and selling here and buying here, or buying here. You can really get yourself in trouble if you don't know where you're at on the bigger time scale and where you're at as far as news. So you have to be mindful of that. And another thing is, you have to use this with a very large account. As like I said, the smallest account that I would probably use and be safe would be $5,000. That's the smallest I would go with this, and then you would be running at 0.01 lots is what you'd be trading. And when I let's go to indicators. Where is it? Here's a money management indicator. We're going to edit. Here's my risk is 0.001. This is the formula that it used to calculate. And then I use the equity. That means I'm using, if I take a trade, it's using the whole equity. There's different account balance that's a little bit more aggressive, and then the free margin, it goes from most aggressive to least aggressive, and I use the middle. I use the middle ground. And then 14 for the ATR, and then the multiplier is 10, because this is a tick chart. It's going to be consistent. The ATRs are fairly consistent, and size and points if fixed stop lost. That doesn't matter because we're not. So you can see on 0.001, that's why you have 0% risk and a 3 stop loss. So, how'd that happen? I think I changed something that I didn't want to change. What did I do? Okay. Alright. Yeah. I ain't gonna worry about it. Because I know that I'm only using 0.1 lots with a $25,000 account. And if I had a $250,000 account, I could easily make a living out of this with just working a couple hours a day. So, just something to keep in mind. But that is how I use Mr. Yen's Super Scalper in a nutshell. And if you're interested, leave a note in the comments, and I can help set it up for you. Don't mind at all. And if you make a bunch of money, eventually, I'd rather you make money and then give me an ETH or a stake, or a couple $100 or something. I don't know. I don't care. A couple, $1,000, whatever you feel is appropriate for, if it helped you out. But if you like scalping, you like fast action paced, practice before you go demo before you go live. Demo for several months, so you can run into different scenarios. Make sure that you're avoiding news. Make sure that you're looking for extended markets, extended red or extended green, and avoiding news. And it's a fairly safe and effective method. But you can't just throw it up there and expect to go at it. You practice it first so that you get a good understanding of it, and using stop and take and close everything, because it's very fast paced. You got to be quick on the draw. So that's all I have for today. Hope you enjoyed it. Hope you might learn something. Hope that I started streaming. Yep. Okay, we're good. Until